Good morning, traders. Richard getting a quick S&P 500 E-minis futures contract cloud chart trading review. What a nice rebound rally. We had a strong rebound rally from all these cluster of cloud chart support levels. Then managed to rebound from the standard line and the turning line of the cloud. We had a cloud chart buy signal and then the rally was on. In the last update, we were looking at this resistance test here. Moving averages did get a snapback, rebounded from this moving average, gapped through the cloud chart resistance, that's bullish, and now we're very close to the top end of the cloud at 5888 as the next key resistance zone to keep an eye on. Now this is a significant resistance zone. We can see it's not only that cloud chart level there, it's also the standard line of Ichimoku cloud to the downside, so it is quite a significant resistance zone for March and April that the market now needs to break through. If we manage to break through that resistance level, the next upside target is 6012, that zone there, and 6044, as well as the top end of the cloud there. Let's pop a number in there. That zone there, that's the top end of the cloud, 6116. So these are the upside potential upside targets, resistance targets. If we manage to break through the 5888, if the 5888 resistance holds, then we've got downside risks as low as this top end of the Ichimoku cloud. Now that could roughly be between a 38% and a 50% Fibonacci retracement of this entire move. And also the first level of support would be the moving averages there, second one there, and then this zone here, this 5524 is the downside risk target. So we could see the market maybe consolidate back down, retest these levels, and then rebound from either that exponential moving average there, a 377 exponential moving average, and then if that support level fails, we could see a rebound from the top end of the cloud. But that's only the scenario if this 5888 resistance level holds. So now it's actually a critical week ahead to see if we're going to break past that zone, and if the positive momentum in the market could get us to the 6000 zone. But keep an eye on down for these downside potential rebound support targets. But we had a very strong rally, plenty of cloud chart buy signals on that zone. Now if we just take a look at where is a Fibonacci retracement of this whole move here, if we look at that zone to, let's say, that zone there, let's take it up to that top end cloud level there. So you can see a 38% retracement here is just below the front end of the cloud. So that would be healthy, a nice consolidation back down to the 23 point first level, and then the 38.2 Fibonacci retracement. So we could see the market pull back to retest those levels. A 50% retracement, incidentally, is very close to where the standard line of the cloud is flattening out. So there, if we get quite a volatile session next couple of weeks, we could possibly see that zone, considering the macro picture. But so far, if we get a rebound from either one, the exponential moving average there, 377, or the top end of the front end of the Ichimoku cloud. So keep an eye on for those levels. Those are the downside targets only if this resistance level at 5888 holds and we get a bit of a consolidation of this strong rebound move that we've had. Turning to the 4-hour Ichimoku cloud, let's go there. What a great cloud chart cross there, beautiful buy signal there, and then get the rebound. Rebound is very close to the top in the cloud, and you can see on the 4-hour we had plenty of secondary entry points on the way up, in and around the standard line being tested each time. Now we've had a strong rally, a little bit extended from the top end of the cloud, so there is consolidation risk back down to 5814 on the 4-hour, and then there's also consolidation risk back down to 5736 on the 4-hour Ichimoku cloud. But so far so good. 4-hour very strong rally with downside consolidation risk. Now let's go and take a look at the daily one, weekly one, sorry. Let's go and take a look at the weekly one. There we go. Now the weekly one, you can see here we had fighting the top end cloud chart resistance level. So a big line in the sand on the weekly Ichimoku cloud is this zone there, 5899, and then the top end of the cloud, we'll just take another line there, pop one in there, just hold on, let me just get another one in there, top end of the front end of the cloud. So the upside resistance targets on the weekly Ichimoku cloud is this top end resistance zone 5899 and 5969. So keep an eye on if we're going to break past these resistance levels, break past the top in the cloud, and then hit the 5969 upside target. Support at the moment is 5719 and 5620 on the weekly Ichimoku cloud. So we could see if the resistance holds at this weekly Ichimoku cloud, we could come back and test the 5719 and 5620. But so far so good. We're back above the bottom end of the cloud on the weekly, and on the daily we just need to get through that resistance at 588 to continue this rally. And if that resistance holds, then we've got downside risk to consolidate back down to moving averages and the front end of the top end of the front end of the Ichimoku cloud. Thanks for watching. Until next time, happy cloud chart trading. Bye for now.